Hello everybody, I'm Clara Hermit and welcome to another edition of Breaking the Mould, our regular market review with our investment research director, Russ Mould. Russ?
Yes.
What's the fuss?
Okay, well obviously, in terms of major headlines, it's still virus in Africa, conflict in Ukraine, crisis in Middle East. None of it makes for great reading, but from a corporate perspective, as summer draws to an end, there's still a lot going on. And for me, the real fuss is going to be airlines, advertising, and the future of digital printing.
Oh, I wasn't expecting that.
No, I didn't think you would be.
Can you put us in the picture when it comes to printing?
Very good, yeah, with pleasure. And the company in question is Xaar. It's based in Cambridge. It's part of the FTSE 250, and they've actually got interim numbers coming up on the 28th of August. Now, it is a specialist in digital inkjet printing technology, and last year the shares went up like a rocket from £3 to 11. This year they've come down like the stick all the way back to a fiver. And the reason for that is 3 trading statements, all a bit mixed, March, April and June. Not bad, but none of them quite good enough to sustain what were very, very high earnings expectations and a very lofty valuation multiple. Now, sentiment's also been dampened by the departure of the very well-respected chief executive, Ian Dinwoodie, at 55.
Wow.
Good for him. He's leaving in 2015. Now, however, one thing to flag is that through his wife's name or account, Dinwoodie's actually been buying shares in the company at around a fiver, so it doesn't look like he's lost faith.
That's really interesting.
It is, yeah.
She's been up to that. What do the numbers look like after the spring downgrade?
I mean, the company's got a net cash balance sheet. It's got a very progressive dividend policy, which is quite unusual for a tech company. And in the end, it's also got a very, very fat pipeline of new products coming out, particularly for printing on packaging for consumer goods, which is a very, very rapidly growing area. So that all sounds quite promising. And if anything, the statement will be more about those products and probably the numbers, because the company's traded those quite extensively. So management's forecast around 60 million quid of first half sales, 130 for the full year, and that compares to 134 last year, hence the disappointment. And also operating margins are going to come under a bit of pressure, according to Dinwoodie, from 30 to the 28-29% range on a stated basis.
Okay, so that's printing, but I guess another area where there's been a bit of turbulence is the airline stocks.
Yeah, they've not been boring, and unfortunately generally for the wrong reasons. I mean, easyJet shares have gone from £18 to 13, and International Consolidated Airlines, who own BA, have gone from 450 to 340. So yeah, it's been quite a testing time.
So what is it that's causing all the lumps and bumps?
Yeah, I mean, in the obviously the geopolitical situation we started with at the top isn't helping. You had the wretched events with the 2 Malaysian airliners. And in the end, a lot of airlines actually increased capacity, expecting good things from this year. So the result has been pricing pressure. That's led to profit warnings from industry majors like Finnair, Lufthansa and Air France-KLM. Now, to give easyJet their credit, they haven't disappointed. The market's looking for 12% earnings per share growth this year to 113p. Good effort all round, if they can do that. So the August passenger statistics that are coming out on the 4th of September will be very important to see if those forecasts are still achievable or not. And just for your reference, everybody, July's figures showed 7.7% passenger growth and a load factor of 92.9%.
So that just leaves us with WPP.
Advertising is one of the world's biggest players in the field, marketing communications as well. So Martin Sorrell, the chairman, very well known to investors, largely because his pay packet tends to get a few people's go every year, but he's a smart guy and he's built up the company from basically nothing. So when he speaks, the market listens. He's already warned of the strength of sterling affecting the numbers. He's already warned of Iraq, Ukraine, Russia, and what he calls the black and grey swans as dampening consumer and corporate sentiment, which is never good for advertising spending. Equally, he's talked about Brazil being a positive effect. He's talked about the US midterm elections in October helping. So let's see how all of these things wash out. For the full year, the market's looking for a 1% drop in earnings per share, but the company is increasing its dividend payout ratio and is running a very big share buyback programme. So let's see what he's got to say.
Okay, thank you, Russ.
Thank you.
That's it from us. We'll see you in a couple of weeks' time. Until then, take care and goodbye.